Good morning, everybody. Happy Thursday. It's August 6th, 2026. Great to be with all of you today on this Thursday edition of Daily Bites. My name is Bob Lang. And let's talk a little bit about markets over here. Well, we see that the SP 500 futures, ES futures are up about 8 points right here, slight gains. NASDAQ down about 200, roughly 0.7%. We see the industrials up a little bit, above 54,600 right now. Crude oil's up about $1 or so. Gold, which we've been talking about lately and added in our Leaps product earlier in the week or last week, up above 4,300 an ounce. Silver down a little bit here, so we have a little bit of a divergence there, along with the divergence in the S&P and NASDAQ futures as well. Volatility is up about 15 cents, still under 16. And we're going to talk a little bit about volatility here in just a couple of minutes. So it's been a pretty bullish week, right? No denying that. Markets up huge on Tuesday, followed through from the gains on Monday and the gains in the prior week. 4 strong days in a row. Yesterday, we started up higher and started and faded towards the end of the day. And we actually did go negative for a little while, but we didn't finish up very much at all. Let's take a look at that chart for a second. I know the NASDAQ was down, but we were down slightly yesterday. So there's a lot of people are looking at this and saying, okay, the blow off top, right? Who cares, right? Just play the action for what you see it. And if you've been in the chat room for the past several days, you know that I've been talking about looking and finding opportunities. And then once you get them, you get involved and you buy something. If it works out for you, you take profits. It's plain and simple. There's no magic secret sauce there with that approach. What you do is you find the opportunity there. And clearly, if we take a look at this chart, there was opportunity for the past couple of days. We see an extended version of the Y formation, right? Y formation is generally bullish. And it means that you go down, make a low, come back up, retest that low. We almost retested low. So it's kind of a funky looking W. And then you carve out the right side of the base and move up here. And once we broke above that resistance level, which was the old high at about 75.99, we pushed out on Tuesday and had a follow through day. Even though it was a red candle yesterday, it was still a fall. We'll still consider that a follow through day. Volume has been very, very good as well too. We've seen that good, strong, healthy volume when the market is going up. MACD is on a buy signal over here. Relative strength, nearly overbought, not quite overbought, but as you can see from back here in May, folks, take a look at this. When we got overbought on the RSI, that was not a reason to sell. I repeat, that was not a reason to sell. Remember, an overbought condition is not a signal. It is a condition. It tells you what the market is at a certain point in time, right? It doesn't tell you to sell. Where is the sell signal? When this rolls over and the price action starts to get really nasty, right? And then if you see some follow through to the downside like we did here in the early part of June, latter part of June, middle part of July, that sort of thing. So once we rolled over, then you can start getting aggressive to the downside, all right? As of right now, it's way too early to anticipate some downside. Of course, the market is going to come down, right? We all know that at some point in time. But your job is to try not to get in front of that unless you have some put protection on, which you should always have some put protection on at all times, right? At all times have some puts on, even if they're not working. We had a whole bunch of puts that expired worthless yesterday. You know what? I don't care. Doesn't matter. You know, we needed the put protection in place to protect against the downside for the long positions that we had. We've had a positive week, even though those puts went down. Go figure, right? So that's a good lesson for you all. So I want to show you a couple of charts here this morning. This is one we don't share too often. It's called the SIBO options equity put call ratio. Now, there's two different equity or two different put call ratios you can look at. There's the total put call ratio, which includes ETFs. And then there's the equity put call ratio, the one I'm showing you right here, the CPCE. And that owes only stocks. And that's one really that is the most effective use in terms of using as a contrarian indicator or a trending indicator, right? And it's just equities. It's not ETFs. It's not bonds. It's not anything else. It's just equity stocks, right? So people who are buying puts or calls on Microsoft, NVIDIA, Apple, Salesforce, any of these names, it's all captured into this CPCE ratio. So what is it? What is it for? How is it meaningful? Well, we can see back in July an elevated put call ratio here, right? We saw that over here for quite some time. Anything above 0.72 is probably elevated. Anything above 0.9 up to 1 or 1.1 is extreme, and it is a time to turn tail and start getting bullish, right? Why is that? Because it's a good contrarian indicator. Also over here, when the put call ratio is super low in the 40s, danger Will Robinson. This is a time when you need to start considering trimming your gains. And certainly in May and certainly in June, when the put call ratio started to rise, we saw markets starting to go down, right? And you can see that over here in the SP 500. Towards the end of May and beginning of June, we saw that nasty nosedive over there. So where are we at right now? We're kind of in the zone here between 0.6 and which is the long-term average of put call ratio, 0.6, 0.61, and 0.75. So we're a little bit on the high side right here, as we have been for a little bit. If the markets do come down and the put call ratio comes back up here, it will not be on a buy signal. We're currently on a sell signal on this put call ratio here. So something to watch for. New highs, new lows. Breath. I'm always take a look at this one. New highs, new lows. Strong 2 days. It's actually 3 days in a row. Friday was not that great, but Monday, Tuesday, Wednesday, strong numbers, but still not to 100 yet. So we need to get 2 days confirming above 100 new highs over new lows to get that onto a buy signal. And that is a strong buy for the intermediate term. What does that mean? That means 4 to 6 months there's going to be a buy signal. We had that back here in the springtime, and we had a nice strong buy signal for several months, even though the markets were down in June. This indicator was still reflecting a buy signal. And why is it off? Well, we had not back to back. We had two minus one that were below minus 100. And so when you get the 2 days that are under 100, it turns that buy signal into a neutral, right? Not necessarily a bearish signal yet, but we bounced around a little bit and we're starting to move right back up again. And one of the reasons for the strong breath in the new highs, new lows is because of the broadening out of the market rally. So the RSP, which is the equal weighted S&P 500, hit new highs recently, and that is reflective of strength in a lot more groups other than technology. We're seeing good strength in industrials, we're seeing strength in retail, energy, healthcare, biotechs, credit cards, banks, financials, you name it. We're seeing some good strength in a lot of different groups here right now. So that really kind of feeds into why the new highs are expanding over the new lows. I think at this point in time, earnings have been carrying the markets here for the past couple of weeks. Earnings have been very, very strong. We saw good earnings last night from names like SanDisk. Of course, the stock is getting hit today, but there's a different reason for that. Good earnings from ELF, which is a beauty company. We saw okay earnings and a little bit of a mixed quarter from Axon Enterprise, excuse me. And this morning we saw good earnings from DataDog and guidance. I know the stock is getting hit today. I really honestly don't understand this, but I think this is going to present a good opportunity for you if you want to jump in on that one. We saw good earnings from Unity Software, which is a name that some of our friends and colleagues over in the chat room had mentioned quite a bit. Jose being one of them, a couple of other people as well too. So Unity is going to do well. I did see some news this morning, very interesting news on Lilly. And what is that news? That news is, I think Amazon is to distribute the GLP-1. Yeah, stock is up about $12, $13 on that. Amazon Pharmacy is going to start delivering the GLP-1 medications to eligible Medicare patients for $50 a month. So that's a nice pop for Lilly. Of course, they had earnings yesterday morning, which were real strong. The stock was trading well over $1,200. It came back down a little bit. I've had a little bit of Lilly on it for a while. Took some of the profits off the table yesterday, but it's certainly one that we've all take a look at, and it's been a great buy traditionally on the pullback. So take a look at Lilly. Tonight we have reports from Airbnb. That was my chart of the week, which came out yesterday. Take a look at ABNB, which is its chart is starting to look a lot better. Let's take a look at that one. Higher highs, higher lows. Textbook definition of an uptrend. We've had a MACD buy signal over here. Relative strength is good. They're looking for, looking for 22% growth on earnings this quarter. We had good earnings from Booking Holdings and also from Expedia last night. So I suspect the Airbnb is going to be good. Marriott was also some very good earnings. We also did see some good earnings from Hilton and Hyatt last week. So, those are sort of tangential to the success and the good increase from Airbnb. But I think this time around we're going to see some good earnings here. DoorDash came in a little bit light yesterday afternoon. Later on today, we'll also hear from AAOI, which is one of my favorite momentum names. AAOI is Applied Optoelectronics. Stock really had a huge run from earlier this year, from about $30, $25, $30, all the way up to $220. It's pulled back to the 200-day moving average just last week, $78, $79, and it's moved right back up. It's up about 45% in the past 5 days. It's right pushing up against the 50 and then 100-day moving average. So this is where the rubber meets the road for AAOI. It's either going to gap above there and make a run towards 180, 190, or it's going to pull back hard and come back down towards 100. So it could move $30, $40 to the upside. It could move $25, $30 to the downside. So it's a pretty volatile name, and it's priced in for a big move as well too. After that, we have a couple of smaller names like Rigetti, RGTI. The trade desk will be reporting. And then tomorrow morning, a couple of big earnings that I'm looking at include Oklo, OKLO, Take-Two Interactive, which is a good-looking chart here. Take a look at this one. Take-Two had a rough day yesterday, but just pulled back to the 50-day moving average. This is the only pure-play gaming name that is out there anymore. Activision is gone, obviously part of Microsoft, and then also Electronic Arts was bought up by private equity last year. So Take-Two Interactive Software is the Grand Theft Auto publisher. So they higher highs, higher lows in that chart looks pretty decent as well too. But this stock has a tendency to move very, very large when earnings come out as well. And then tomorrow, Vistra Energy, along with a couple of other smaller names like Wendy's and Under Armour. I'm not really too interested in those. But take a look at VST today for tomorrow. It's pulled back quite a bit here. Some of these energy names have given you a nice entry point to jump back in. GEV being one of them. Also, ETN, when it pulled back, it gave you a nice opportunity to get in there. It pulled all the way back to 365. Stocks up almost $80 since that pullback just a week and a half ago. So that's going to be it, everyone. One more reminder here for you. On the website, explosiveoptions.net, there's a lot of free resources for you over here. Chart of the week, which came out yesterday. And you can just sign up on the YouTube channel. You'll get emails sent to you as well, too. you'll be the first ones to see the chart of the week, the daily bites, which is what we're doing right here. We do these Mondays and Thursdays when there's not a holiday. Hopefully giving you a good jump, a start on the trading day for the next couple of days as well. We have some options trading ebooks. We've written 6 books over the past 10 years. Those are all free for all of you to read. They're evergreen material, so it's good stuff for you to understand. We have one on the bear market, how to bear market playbook. We have stuff on risk management with some stories from the trenches. So a really good, interesting reads if you have a chance to check those out. Educational webinars, which I've been doing once a month for the past 8 months. We have a new one coming up in a couple weeks. I'm really excited to join with Jared Dillian, who's going to be joining me in a couple of weeks for the next webinar. And then Option Site Insights blogs. I've been writing these things for 15 years, and there's a new blog every single week. So I have 15 years worth of really interesting articles for you to learn from. Trading tutorials, and then the online mini course, which you can sign up for free. It's just a 9-day course that we have 30-day course as well too. So all of these resources, the price is right. It's free, and you can learn about options. You can learn about trading. You can learn about risk management. You can learn about markets, the Fed, anything you want to grab onto. It's all available for you for free. So come to the website, check it out. Have a great day, everyone. Appreciate you spending a little bit of time with me. I'll see you guys all Monday morning. Enjoy your weekend. Have a good trading day today and tomorrow. And don't forget, tomorrow, non-farm payrolls for July is going to be out. ADP number came out yesterday. It was a little bit light on the private side, so we'll see if that affects the non-farm payrolls tomorrow. Appreciate all you guys being here. And if you're in the chat room, I will see you there in a little while. Take care. Bye. Emotional feedback, our time is lately. Very good, all those